Welcome in this video, ZBCN coin. What is the next move? We will analyze it. Don't forget to subscribe, like, and please watch to the end to understand.
The chart shows a very prominent and strong downtrend structure that spans over a wide time frame. This trend line is a major structure that has been suppressing the price's upside attempts for a long time, causing bullish moves to be consistently rebuffed. Each time the price approached this level, sellers re-engaged and pulled the market down, so that this falling structure gained more and more strength. However, recent developments suggest that this long-lasting pressure is now approaching a breaking point, and that a significant shift in market dynamics is on the verge. In the past, the shorter-term falling structure just below this major trend was technically broken to the upside. This break was actually one of the first strong signals that the market was preparing for an upward turn. That small structure was a sublayer of pressure in the bigger picture, and once it was overcome, the market started to return to buyers' control. Eyes are now centered around this major falling trend line. This is because a break of this level will open up the potential for a much broader bullish scenario to play out. Major falling trend lines are often closely watched by long-term investors and large funds as well. This is because such lines determine the overall direction of the market and are used as a reference for investment decisions. Now, the price is getting closer and closer to this major falling line and has shown its upside potential with the previous small trend breakout. This can be interpreted as an important sign that the market has now found buyers at the previous lows and is preparing for upside moves. The multiple trend break scenario, which is a common structure in technical analysis, is now active. The upward momentum that started with the break of the minor trend has carried the price towards the major trend line. A break of this level may not just be a short-term reaction, but the beginning of a long-term bullish move. Because when major trends break, the market usually changes direction and a new bullish cycle begins. That's why this trend line, which is currently being tested, is extremely critical for technical analysis. If this major falling structure is breached, the price has the potential to reorient towards the peaks it has previously failed to reach and surpass. Technically, the market often experiences a trend reversal after such breakouts. This reversal brings about a change not only in the price chart, but also in investor psychology. The sell-side audience is replaced by investors who develop buy-side strategies. This creates a positive mood in the market and strengthens the possibility of a new rally. Large trend lines usually contain a large number of touch points. The fact that the price reacts every time it approaches this line increases its accuracy and market acceptance. The current approach to this line increases the probability of a technical breakout because the way the price has come to this level is quite stable and strong. Also, momentum has already been gained with the break of the previous minor trend. It is technically possible that this momentum could be further strengthened with an attack on the major trend line. In addition, looking at the volume data, there may have been a noticeable increase in volumes during the minor trend breakout. This is an important sign that buyers are now stepping in more strongly. Now, if a similar increase in volume is observed around this major trend line, it will increase the technical confidence that this breakout is not just short-term, but could be permanent, because volume is as important as price in technical analysis. Volume-supported breakouts are usually stronger and longer lasting. As a result, the upside technical process that started with the break of the minor downtrend in the past may now be on the verge of a much bigger opportunity. The major falling trend line that the price is currently testing has the potential to take the price to much higher levels if it breaks. This breakout would be a powerful move that would change the perception of the market, not only technically, but also psychologically and structurally. If the price manages to break above this large falling structure, the unreachable peaks of the past could become targets again, and the market could continue its upward movement with unprecedented momentum. But we cannot decide the analysis only by trends. Let's look at other metrics. Stay tuned. A remarkable and technically meaningful structure has started to form on the chart. Looking at the recent price action, we can see that the preliminary stages of a classic and powerful reversal pattern, the inverted shoulder-head-shoulder pattern, are beginning to take shape. This pattern usually appears towards the end of downtrends and gives very reliable signals that the trend is about to change direction. The formation of the H and S pattern indicates that a change in market dynamics has begun, and sellers are about to lose their power and be replaced by buyers. Currently, the first shoulder is clearly formed on the chart. With the subsequent bearish move, the most prominent part of the H and S pattern, the head zone, has formed. This head usually represents the lowest price level and forms the basis of the pattern. The price then rebounded and started an upward movement, indicating the preparation of the final part of the pattern, the second shoulder. However, even though this second shoulder is not yet fully completed, the overall outlook clearly shows that the pattern is in its final stages. Patterns like H and S are not just about formal similarity. Each of its components represents a different stage of market psychology. The first shoulder indicates that the declines are losing strength. The head indicates that the market is making one last attempt to bottom. The second shoulder indicates that buyers are starting to re-engage. Therefore, the formation of the last shoulder is a critical stage for the completion of this turnaround scenario. If the price forms this last shoulder and starts an attack towards the neckline, an important breakout point in terms of technical analysis will be tested. At this point, the neckline, the upper boundary line of the H and S pattern, is a critical resistance level. If the price breaks this level to the upside, it means that the pattern is confirmed. The general technical target for H and S patterns is the distance between the bottom of the head and the neckline. So if the pattern is completed and the neckline is crossed to the upside, the price is technically expected to move higher by this distance. This provides a very clear target for traders. At the moment, the price is quite balanced in the process of forming this pattern and is moving in a structure that is far from sudden, sharp declines. This is another sign that the H and S pattern is forming in a healthy way. This is because an ideal H and S pattern develops with balanced and gradual movements. There is a remarkable symmetry between the shoulder and head levels. Since the current technical outlook is close to this symmetry, the probability of successful completion of this pattern is quite high. There may also be developments on the volume side that support H and S patterns. Usually there is no significant increase in volume as the head is forming, but as the price approaches the neckline, buying volume increases significantly. This indicates that traders' bullish expectations have strengthened, and the H and S pattern has been recognized and positioned. If the volume starts to increase in a supportive manner during the formation of the second shoulder, this makes the confirmation of the pattern much more likely. The successful completion of the pattern would be a major breakout, not only technically, but also psychologically. Because investors, who have been under pressure for a long time, start to regain confidence with this breakout. This confidence starts a positive cycle in the market and brings in new buyers, especially after the price breaks the neckline. Testing this level as support and continuing on its way, investors who trade with the breakout retest strategy also come into play. This allows the price to rise more steadily and strongly. Big traders and algorithms also take H and S patterns seriously. This is because such patterns have a statistically high success rate and provide important information about the direction of the price. If the pattern is completed, it could mean the beginning of not only a short-term but also a medium-term trend reversal, especially if previously tested lows now become strong support, paving the way for post-H and S rallies. All in all, the current structure on the chart supports a positive technical scenario. The formation of the inverted shoulder-head-shoulder pattern is highly technical and controlled. If the price completes the second shoulder and crosses the neckline to the upside, it will be a strong reversal signal. With this breakout, there will be a bullish potential as far as the distance from the bottom of the head to the neckline. This presents a valuable opportunity for traders to set technical targets and get the risk-return balance right. Yes, friends, I hope you liked the video. If you subscribe to my channel and like the video, more videos will be coming. Be careful in your investments, analyze the risks correctly, and always take strategic steps. I will be with you with different analyses, investment opportunities, and technical information in my videos. I wish you all a lot of profit. See you soon.